We just had full year results from Green Dragon Gas, a leading independent gas producer in China, and they're saying that they're confident they're going to see a sharp uplift of over 50% in production from its unconventional gas assets in China, also reporting underlying revenues up as well by 13%. Let's get more on that from Randeep Grewal, who is the CEO. So just look at the productivity first of all, the production. Why is it going up so sharply, and why do you expect it to continue to go up this year?
It's simply on many fronts, and good morning, thank you for having us. On many fronts, the production profile is simply a function of what has already happened in 2014. So if we take a look at 2014 results we put out today, between the partners, CNOOC, PetroChina, CNPC, CUCBM, and Green Dragon, collectively we've deployed over $1.1 billion US into the assets for a total of about 1,938 wells that have been drilled. These wells are at different stages of completion, production, being hooked up to the gas sales lines, and actually coming online from their dewatering cycle before they start producing gas. So the production profile that we've outlined going into 2015, we're looking for a 50% increase in gas production. We think our exit rate in this year will be about over 12 billion cubic feet on an annualized basis, coming up from about 8 billion in 2014. In addition to that, looking at 2014 year-end results, we've also identified our 1P, 2P, and 3P audited reserves, which is our 9th consecutive audited report. Shows a valuation of about 1.5 billion, 2.5 billion, 21.2 billion US respectively. So a robust conclusion, our 2014, quite a transformational year for the company as we look forward into 2015 at this stage.
And I suppose that transformation is really is the best way of describing it is you're actually moving from an exploration company to a production company now. I mean that's you kind of reached the watershed now, and from this stage one would expect to see production going up, but also perhaps to see your finances changing.
Precisely. In fact, you saw that in 2014, where we do actually turn the corner from being an exploration and project development company onto gas production. The revenues increased 13% up to 33.8 million. But importantly, the EBITDA had a 156% increase from a negative 8.4 million in 2013 onto a positive 4.7 million in 2014 year end. And we expect that EBITDA to compound and increase year over year from 2015 onwards. So that, yes, indeed, that is a turn from being an exploration company onto a gas production company.
Yeah, how is the relationship with your partners going? Because I mean, it was perhaps a slightly unconventional way that you came together, but now you are working effectively. How's that going? Are you getting a fair slice of the benefits of this deal?
So the partnership is key to our success going forward, and it's a very close, bonded partnership on many fronts. Bonded because the government did indeed make a decision in favor of Green Dragon in 2013 that was documented in binding agreements in 2014. Bonded in terms of we collectively have one mission, and that is to monetize the large gas reserve that we collectively have an equity interest in. Bonded in that we collectively have spent 1.1 billion US dollars in developing this resource together. So there are many touch points between our partners and ourselves, and we have one common mission: monetize the gas resources that have been developed. So the partnership is indeed very close. It's extremely important. Working in a foreign country like China, to have local partners that are very closely supporting your activities, and certainly we do so on a daily basis between ourselves at this stage.
And if you look at generally and globally the sector's having its share of problems. Do you think that, in a sense, China is slightly separate from that? It's a different environment, and that's why you're so optimistic.
We've been in China for over 20 years developing green dragon gas resources over the last 18 odd years. And one of the wonderful benefits of working in China is the stable, long-term nature of the government, who does indeed plan over decades its development. And as an investor, one knows precisely what will happen. So when we think about commodity prices, the gas prices in China are regulated by the central government, who is very focused on getting the energy mix enhanced when it comes to the gas component from the current 4% on to 25%. And with that, it has provided companies like Green Dragon clarity as to what it will do with gas pricing, or the regulated gas prices. Even though coal bed methane prices on the market economy, the regulated gas prices provides us a floor of, if you will, the minimum gas price we would get at the wellhead, or if we distribute that at a retail station. So essentially, for many years now, the gas prices have been going up at 9% per year, quite decoupled from Brent, if you will. And most recently, 2 months ago, we saw an additional gas price increase of about 0.14 RMB a cubic meter, which is just over $1 an MCF. Currently, we are getting somewhere between $10 to $12 US an MCF at the wellhead. And for that gas volume that we deliver into our CNG retail station, we're selling gas at $18 US an MCF. So yes, we are very well sheltered from the commodity price curves that have taken place, globally, if you will. And the regulatory regime and the long, stable, planned regime of China is an integral part of our success story at this stage.
All right. Randeep Grewal, thank you very much indeed for joining us.
Thank you for having us.